Should you invest in Uber? Well, the company behind everybody's least favorite part of the weekend just reported their first quarter earnings for 2024, and we need to talk about it. Shares fell off a cliff in response, so let's find out if you should be following shares off that very same cliff, or if now is the perfect time for the bulls out there to start to buy in. All right, you guys know how this goes already. Welcome to the 5-Minute Peel. My name is David. Let's go ahead and break down Uber. All right, let's try to keep this one to 5 minutes, so let's just go ahead and dive right into it. First thing to notice is that this company is like a $115 billion market cap. That puts it in like the top 150 companies in the entire world, despite the fact that the share price fell about 7% the last 3 months. Either way, I mean, it's hard to be mad when you're up 65% for the year, very much outperforming the NASDAQ and the S&P 500. But when we break that down into revenue and gross bookings growth, it becomes a little bit more cloudy. So healthy growth from both of them, but it's not necessarily ever a good thing to see. Revenue growth outperforming that of gross bookings. Gross bookings is effectively gross revenue. It's all the money that Uber takes in before, having to adjust for contra revenues to shit like discounts and paying their contractors before they spit in their face when they ask for healthcare, whatever the fuck they do. But either way, this shows a lack of effective monetization of that top line revenue. Clearly, they're not doing a great job after revenue either, because operating income is down 75% compared to the same period of last year. Other income, meanwhile, somehow they managed to lose all this money, despite the fact that they easily could have just pivoted that into bonds or even fucking money market and start to earn interest off of that. But either way, they led to a net loss of $654 million for the quarter. That was following on 3 quarters in a row of profitability. They completely killed the vibe in that sense. That's largely the reason for the sell-off. Don't get confused by this jump up in operating cash flow. Most of that was due to about $750 million in add-backs from losing so much goddamn money on their equity and debt investment portfolios. Now, monthly active platform customers, this sat at about 149 million, basically flat compared to the 150 million at the end of the fourth quarter of 2023, but solid growth from the beginning of 2023. R&D to sales, what we don't like to see is this declining over time, especially when you're a maturing tech company. You want to keep your edge through technology, and that is absolutely not what Uber is investing in right now. Maybe this could turn around, but it's very much not a good sign when you see multiple quarters in a row of diminished R&D to sales. And we also did see pretty flat performance, literally zero growth, zero change at all in the total number of monthly trips taken by your average MAPC. Was about 6% growth compared to last year. So again, relatively solid, not a whole lot to be super upset about there, but there is when we talk about the numbers that they reported and the guidance along with it. So they beat sales by about 0.5%. They missed on EPS because they fucking swung to a loss that nobody was expecting. Gross bookings missed by less than 1% or so. There wasn't really expectations around MAPCs, but considering this fell for the quarter, we're just kind of stacking red flags on top of each other at this point. That only gets worse when you talk about their adjusted earnings expectations. It came in a little bit lower. The midpoint of the range came in a little bit lower than what analysts had been expecting. Now, keep in mind, adjusted is just Latin for total bullshit. So they are going to be seeing more GAAP losses for the year, especially because of that goddamn investment portfolio. Now, bookings are expected to rise as well, but again, below that midpoint range that they were expecting. No mention of Uber One subscribers whatsoever. Now, quite honestly, usually I say that it's a bit of an overreaction when shares dump like this, but I don't think this one was enough of an overreaction because of those red flags that you're stacking on here. You miss on earnings, bookings grow well, but faster than revenue. It should be faster than revenue, say right here. When you have a lower margin business growing faster, operating cash flow growth is only strong because of adding back losses, and you gave updates on platform mobility, delivery, and freight, but with no numbers or data behind it at all. I'm surprised the market wasn't like, what the fuck is going on here, and dumped it like 10-15% like they did to some other companies this week. Maybe it's because revenue growth is still growing relatively solid, and most of all, gross margins held up very well for the period, despite the lack of profitability and the growth in lower margin segments. It's the best gross margin they've seen since the last quarter of 2021. So, there's a couple of green flags in here as well, but not a whole lot rest for the remainder of our presentation here. So, as we can see, operating income fell off a cliff, just like the share price. Quarterly net income, like we said, swung to a loss for the first time since the beginning of 2023, that was their last quarter of losses before they just reported this here today. So when you're a maturing company, you're supposed to be moving into a more profitable state. Uber, historically, they've been able to kind of grow their way out of problems around profitability, cash flow management. That is not really an option for them anymore. The move fast and break things environment of the ZIRP era is completely gone. Uber needs to focus on cost controls, cash flow management, and in a high interest rate environment, that's going to be a lot tougher for a company that historically has relied on VC subsidies. So instead of relying on VCs, what are they doing? Well, they are jacking the fuck out of prices way faster than what we've seen in terms of an inflationary growth rate here in the United States. It used to be that Uber was like the cheap Walmart model, and that was kind of what brought people in. No longer. Lyft has taken that. Now, Uber still does dominate the market, but it's a question of market placement. Do you want to be the premium or the cheap offering? When it comes to an industry like ride sharing and food delivery, cheap seems like the ultimate option because nobody really gives a shit what the company is that's delivering to them. Okay, let's talk about our summary of thoughts on what we're looking for going forward. So, the real problem with Uber is that they've just been doing way too much. Like we said, they've kept this move fast and break things mentality that they had in the ZIRP era through two JPAL's rate hikes and even here into 2024, which is absolutely insane. They need to rein in all of these different ventures and focus on streamlining to profitability now that VCs can no longer subsidize those cheap rides. Like we said, it's also not a sticky business. There's no brand value. Nobody cares who's delivering their food. They just want the cheapest option. Uber One is a good attempt at this, but again, you're not fucking telling us anything about it. I can only assume that it's doing terrible. Inability to remain profitable also suggests that this is like, it's not a maturing company. It's like graduating from college, moving back home with your parents, and vaping and playing video games in the basement all day. That's basically what Uber is doing, just the corporate America version of it. Plus, longer term, they are looking at competing with the likes of fucking Tesla, Google, GM when it comes to things like autonomous vehicles. This will render the entire ride-sharing market completely irrelevant. They will not matter anymore once you have autonomous vehicles that don't require a driver driving people around. Not only because that allows individuals to actually make money off of it, but it's going to be insurmountably cheaper as well because you don't have that liability and the cost aspect of having a driver in the car. Going forward, we want to see any developments around autonomous vehicles, especially when it comes to the Uber One stuff. If there was some kind of way to incorporate these two together, that would be a very compelling long-term opportunity. But compared to what Tesla says they're going to be able to be doing in the next 1 to 2 years or so, this is definitely not looking good. We also want to hear management commentary on cost cutting and cash flow management, especially given this regulatory environment. Places like Massachusetts, California, Minneapolis are starting to institute minimum wages for drivers, obviously not good for Uber. Keep in mind, however, the market opportunity is enormous. They don't necessarily have to dominate both of them to be successful, but they do need to figure out if they're going to step back into a growth stage or streamline themselves to profitability. They also need to figure out if they want to position themselves as the target to Lyft's Walmart or if they want to maintain that very low-cost consumer market. All right, so finally, our rating, 2 out of 5 bananas. You want to avoid this thing. If you hold the stock already, don't sell and go run for the hills or anything. Remember why you bought it. Remember what your thesis was and kind of the goal that you were looking to get out of it and what your time frame is. But if you're somebody who's kind of sitting on the sidelines and thinking about investing in Uber, now is definitely not the time despite the fall in response to their earnings. That about does it for us here today. Damn, this black background looks sick. I mean, apologies to everybody because you can see me better, but it does look pretty cool nonetheless. All right, happy investing, happy trading. Let's get you guys out of here. Everybody have a great one, and bye now.